How we doing? Welcome back to the series. Here we have another case study, and this actually is the start of the year. This is a new trading day of the year, the first trading day of the year. I think I'm gonna go from this day on to kind of where we're at present, and kind of where I've done market reviews in the past, and I'm just gonna keep on going with this series in price, and we're just gonna keep on going. So this is gonna be like 2024. And I'm probably gonna go up, and I guess we'll see where we end up going. But as always, I'm a developing student, and these are just my interpretation of the price. Shout out ICT. So let's get straight into it. What is the daily doing? What is daily order flow? As we can see, we had two indecision candles. We end up having displacement here, momentum bearish, and then we end up repricing lower all the way back down to this daily imbalance here, or almost to this daily imbalance right there. We end up taking sell side here. We end up having a sell day pretty much. So we had two sell days in a row after two consolidation candles here. And as we see here, here's the hourly structure. We have all of these low resistance failure swings that all got taken within today, within the last 2 days. And notice as well, this is the first trading day of the year. So there's likely not going to be a lot of risk placed on this day by large institutions, but we still end up having a very massive sell-off. This is like almost this is a 400 point sell-off that we had today. So we had a big displacement lower at the first trading day of the year. I'm not gonna expect this every single day, every single trading day of the year, or every single. I want to expect this. I wouldn't really expect this to happen, but it ended up happening. All right, and here's the E-mini S&P. As we can see, we end up forming SMT within a fair value gap within this order block right there. Gets repriced to lower, and then we have sell side liquidity that rests here, and then we just had nice displacement lower. Pretty much two kind of very similar fractals in price back-to-back days. We end up having accumulation, manipulation, forming SMT, and then end up displacing. And notice how both of those high days are happy within London. As we can see here, we have a new week opening gap, and that's kind of where we reaccumulate in, and then we end up distributing towards sell side. All right, here's that 12 a.m. opening price. Here's your 15-minute chart. You end up displacing higher, and here's your 8:30 opening price. So we end up also manipulating higher into an order block. We don't want to trade into these amounts here. After we've had this big displacement lower in the overnight session, I wouldn't really be looking to really engage this, especially since it's the first day of the trading year. So I just wanted to include this within this kind of case study. But basically, this type of action is going to repeat every single day, but it still can be traded. But I want to point out that although it could be traded, why would you even why do you need a force on forcings on these types of days when it likely won't be repeated, when it's likely a little bit lower probability? No, we want to wait. We want to wait for higher probability conditions. We want to wait for things that we know will repeat in the market. We want to go into the trade having confidence, regardless if we win or lose. We want to know that we had evidence to support that opinion, or to support that trade, to support that thesis. And if we take a loss, then cool, it's a part of the game. So here we have 9:30 market open, and as you can see, we end up generating low resistance liquidity. Again, like a repeating theme. Low resistance liquidity in the market, and then we end up reclaiming this SIBI right here. We don't trade up into here, and notice how weak price is. Just the underlying weakness in price. This is a 5-minute chart. We end up displacing lower, and we end up kind of retracing back into this 15-minute, 5-minute SIBI here. We fail to really rebalance the rest of this. So for me, and what I see within this is that this is just going to set us up for the rest of the week. This is really just going to set us up for the rest of the month. We have imbalances here that need to get rebalanced, so these are likely going to be draws on liquidity in the upcoming future. We have highs that have been generated right above these. I'm just going to use this as a study opportunity. I'm just going to use this as an area which I can see what's happening overall. And here we have standard deviation. We have this manipulation move around market open, and then as you see, standard deviation lines up. We have -3 right there. We have a possible reversal within here. That's what ends up happening. We end up retracing to premium of this into this premium or into this premium array right there, and then notice where the second stage of redistribution happens within this area right here, right there. Boom. And then here we have the 950 macro. 950 macro offers retracement, and then we come back up. So we have sort of manipulation, and then 1010 starts another move lower. that's that 950 macro. And then here we have another standard deviation projection. We have the first retracement here within this model. Notice as well, probably negative 3.5. Standard deviation lines up nice. And where do we have our silver bullet? Right there within that negative 1 to 1.5. Then that negative 2 to 2.5 is possible reversal. So that's retracement. And here is a 3-minute chart. And as you can see here, we have a very tiny imbalance that we end up holding. Notice how we have an imbalance here on the left side, and then we have an imbalance here on the right side. So this right side imbalance becomes a lot more sensitive. We end up forming SMT here, and then we end up breaking down and offering retracement. We notice how we don't retrace into equilibrium of this price leg. We don't end up doing that. We end up displacing lower again, coming back within this imbalance here. Notice how this low is referred to within that imbalance, within that balance. So this low becomes a PD rate within that imbalance, and then I'm not sure what constant encroachment I marked out. I really wish I knew. I really wish I knew what type of constant encroachment I marked out. But as you see, there's a constant encroachment of something there that we end up respecting nicely. For now, we'll just say that wick right there, and then we end up distributing lower to sell side right there. And then notice what the market does at the end of the day. We've had a huge sell-off. This kind of was like yesterday, the day yesterday. We've had a huge sell day. The end of the day macro is going to be pretty sensitive. It's going to want to close back up within that range, and then look to do something like that. Although these days, and this is what I kind of want to get after within this case study, is although these days can be traded, why force it when it's not as clear? Although there was decent action, although like you could have got engaged within this, although you maybe could have looked to take a trade, why would you really risk it? Just demo trade it, just paper trade it, just get in tune within the market. It's the first trading day of the year, just relax. You don't need to be putting on new risk, but you can as well. I'm not here to try to influence anyone. I'm just here to do case studies on what price action did. That's all I'm trying to do. So all these days can be traded. Just for me personally, I'm probably not going to look to force it. And on a new trading day of the year, we can come back to this case study and we can see, hey, yeah, maybe not look to force it. And here overall, we had the daily profile. We end up having London high day again. London high day is important because we have SMT. It now becomes a classic sell day. We're looking for order blocks to get traded back into at market open when we have a classic sell day or breaker blocks. We end up trading order block at market open. We end up breaking down, have it 10 a.m. Retracement lower, and then 1050 macro puts in this low here. Sorry, I don't know if I had a slide for that, but 1050 macro ends up putting a low. Then we have 1240, 1250 macro right here. Then we have the 150 macro there, and then we end up having 230 having that retracement, and then end of day macro. Market on close macro ends up having a market on close, and then we end up trading back within that range. So overall, first trading day of the year, and this was the type of profile that we had. Anyway, I appreciate it, and I'll see you guys in the next one.